When filing your taxes, there's a lot of things to consider, and today we're going to talk about when and if owning a home can help you save money on your taxes. All right, Brett, so can being a homeowner help you save money on taxes?
It's a good question. It all depends on whether or not you take the standard deduction or if you itemize your deductions.
And what is a deduction exactly?
So a deduction allows us to reduce our taxable income and reduce our overall tax burden. So the standard deduction is an amount that the IRS or Internal Revenue Service provides us each year, and that changes each year. Itemized deductions would be things like mortgage interest paid, home equity interest paid, real estate taxes paid. When you add all those items up, if you compare them to the standard deduction, if they add up to more than the standard deduction, then you'd be able to itemize.
So when we're talking about this deduction, whether you take the standard or the itemized, are we talking just federal tax return, or are we talking state? How's that work?
After 2018, more people are just taking the standard deduction because it's so high on the federal level. Now, that being said, you can take the standard deduction on federal, but then on New York State, for example, you can itemize. And that's all because New York State's standard deduction is a lot lower than the federal standard deduction.
So let's say someone did buy a home this year. What would be the things that they itemize?
So if you bought a home this year, things to consider is look at your closing disclosure form. You may have reimbursed the seller for property taxes, school taxes that they paid up front during the year before you purchased the home. You'll possibly be able to use those taxes in addition to any real estate taxes that you paid after closing, mortgage interest that you paid on the mortgage. If you have a home equity loan in place and pay interest on that, you'd be able to look at those and be able to deduct those. Again, your itemized deductions are more than the standard deduction. That's when the homeowner's breaks would come into play.
Okay, so lots of variables there.
There is.
What's the deal when it comes to working from home? Can you itemize those expenses as far as your office and internet and all that?
That's a good question. So if you're an employee, that means if you're a W-2 wage earner for an employer, you are not allowed to deduct business use of home. It's a non-reimbursable or non-deductible expense. But if you are self-employed, you own your own business, you're a sole proprietor or maybe a single member LLC, business use of home, as long as it's regular and exclusive use for that business, you'd be able to deduct things like utilities, home insurance, mortgage interest, real estate taxes, depreciation of the home, cable and internet. So all those things that normally would be considered personal are now factored in, but that's exclusively used for people that are self-employed, not W-2 wage earners for an employer.
All right, so lots of considerations. Math is hard and it's different for everybody. So when it comes to doing your taxes, I recommend you talk to a tax expert like Brett.